Hey everybody, I'm Justin Schlegel with RHP Real Estate and Team Schlegel. It's the end of February 2024 and this is a state of the market video update. So how are people buying homes these days? Well, about 33% are using FHA financing, 33% conventional financing, about 7.5% are VA financing, so veterans, and 18% of sales are cash. That means there's a little bit of extra that's either like a jumbo or a seller carryback, that creative type of financing as well. FHA numbers have definitely increased. That really changed this past year when the mortgage insurance actually lessened for FHA, and FHA gives you a lower interest rate oftentimes than conventional. So that really helps the first-time home buyers especially. Cash has come down, although in the luxury market, it still makes up about half of the transactions. Right now, the median sales price in our market is $449,990. Now that's different than an average, but that's the median. So there's the same number of sales above and below that price point. Right now, if we look at inventory, we crept up just a tiny bit since last week. We had been flat there for a little bit, but 10,091 active single-family homes in the valley as of this morning. When we look at more than just single family and all property types, we're about 13,384. So again, those numbers have not drastically changed up or down. We've slightly moved up, which is normal for this time of year as we get into that spring selling season. Affordability remains a big topic of conversation and certainly concern for most because it is getting more expensive to live by the day, it seems. And interest rates, of course, play a vital role with that. So as we see interest rates decline, we see more buyers hit the market. And as interest rates jump up a little bit, then buyers kind of pull back. So that's been a common theme for the last almost 2 years now. But we have seen rates improve for the most part over the past several months. We did see a little bit of a jump a couple weeks ago. We think that's going to be more short-lived than long-term. Builders. So some of the builders are actually offering their new homes for rent right now because they have a lot of inventory that's ready to go and they don't want it sitting there empty. So if you're looking for a brand new home, maybe to rent, let's have that conversation as well. But on the buy side, the spec or the inventory homes, those that are under construction or maybe somebody was having built and then they fell apart for whatever reason, there are some good incentives, not only for closing costs or towards options upgrades, that type of thing, interest rate buy down, but also they've bottomed down the interest rate. So there is a lower starting point, whether it's fixed for the entire loan or at least initially, that is something that's out there. But we got to get you registered for your first time visit to that community. A lot of people now, as we're, in a presidential election year, may start to think, well, should I wait until after the election in November? I don't know. Nobody has that crystal ball for sure, but I would caution against using that as the reason to not make a move today. If you want to get into that conversation a little deeper into my thoughts, I'm glad to share that on a personal basis. Headlines you'll see all over the place and just an overall fear of like, oh my gosh, is the market going to crash or where are we at? I don't think that's happening. I mean, if that does, then we got bigger problems. But realistically, our market is in a very good spot here locally. There's lots of construction, lots of new jobs, lots of diverse economic conditions that allow us to continue moving forward. And right now, inventory and demand is pretty even. So it's a very balanced market in a lot of places. You may see some people that say, oh, it's a buyer's market, and some people say it's a seller's market, but neither party has a big upper hand right now. They just don't. So real estate ultimately is a great way to build wealth. It always has been, and I believe it's going to be for a long time to come. Generational wealth. And truly, home ownership is becoming more of a luxury and something that not everybody can attain. And so if you can, it is very good to make that happen because there's a limited supply and you've got more and more investors and investment companies that are entering the marketplace, and that hinders the real people on the street. So tax return season is upon us. If you're getting a tax return and you want to see, can we invest that into some real estate? Let's have the conversation. Let's see what's possible for you that you may not know is a possibility. Any questions, please don't hesitate. That's what I'm here for, to be a real estate resource before, during, and after the transaction. So thank you for watching. Have a great day, and let's chat soon.